Hello everyone, this is Taha, financial market analyst in zForex, and this is our weekly video analysis, so welcome abroad.
Hello everyone, this is Muhammad Taha Bukhari, and it's our weekly video analysis where we take a look on the most important events and assets that will be impacted. So starting with gold, we will see a general uptrend, bullish trend after we stabilize around the 1900 level for some time. We made this came back as a bullish trend. We found a resistance at 1987. We had this correction. Right now, the level that we are watching is this median line, worked 5 times, starting from June 23, Friday, June 23, and until Friday, where we had a stabilization around the 1960, where we may see again a comeback to a bullish trend on gold. This correction came up because of the DXY for the dollar. Dollar also on a daily basis, we saw that dollar touched an important historical level. This historical level around 99.8, around 100, was a solid support coming from the 13th April of 2022. Also, it was a resistance for many times, 28 March to 15 March and 7 March. So historically, this level is important, played as a support. You are waiting for this correction after this huge sell-off happening in dollar. So this correction may find resistance level around 101. So we are waiting for the dollar to come back from this level. So this correction that we saw, it had an impact on gold, and will make its own correction after this bullish trend. So around this median line, we may see a comeback to continuing going up. For euro dollar, it's similar daily basis. We can see we have a bullish trend. We touched this 1.125 as a resistance. We set some dojis here. A correction was expected, but right now we may stabilize around this, coming back toward the 1.118, around 100 moving average, 200 moving average, plus this upper parallel of the downtrend, the down channel that we have here. So we may see a possible correction toward this level. After it, we may came back down in terms of euro dollar. In terms of euro dollar, one of the most important things that we have this week is about the economic calendar, and this week is full of events, full of important events, and full of important data that's coming from European Union economy and from Federal Reserve. One of them from USA. One of the most important thing that is weighted is the central banks meetings, especially the Federal Reserve and the ECB. Also, we have the Japanese Bank of Japan, that they will have their meeting also 28. For we're starting with the US on the 26th. We will have the Federal Reserve rate decision. We are waiting for 0.25 possible increase. So the market is playing by 90.8% that there will be this hike, but the market also is pricing that it will be the last one, the last hike, even in September with 83.84%. The market will price in, the market's pricing that there will be no hikes in 20 September. So the market is pricing that will be the last hike by the Federal Reserve. Also, we can see the impact of this on US 10-year, where the yields, they have fall from the 4% until the 3.75. We came back to the 3.87. So the market is, after the CPI, after the PPI, after all retail sales, the slowdown on all those parameters causing inflation, we may say that the Federal Reserve impact of hikes on interest rate is clear, and this may continue. The labor markets still solid, so we may see labor markets that still creating jobs, and this is, if it means something, it means that the US economy is still robust. This may help the economy not to find itself in a recession. Maybe soft landing that's became a possibility right now. For the euro, we are waiting for an increase in interest rate. There was a hint from members in the ECB that there is no guarantees that we will have more hikes after this meeting, that they will be on 27 July. Interest rate by the ECB, but because right now the ECB still fighting inflation. The PPI in Germany is entered even in the negative territory right now, which means that even the ECB is fighting inflation and it's succeeding in doing this. We will see what will be vision and the prospect about the future interest rate hikes by the ECB and how the market will price this. Like I said, the Bank of Japan, we may see something, but right now the market was playing that there is speculation about yield curve control policy. The inflation rate in Japan is still high. The Bank of Japan want to get out of the past experience with inflation and growth and to create more inflation and more growth and more increase in wages. That's what the Bank of Japan president said the last time. Here Friday we have an important data coming, the core PCE and also the personal income. The core PCE, which is one of the most important parameters and important data that the Reserve, especially Powell, watch always, and it's gauging through it inflation. So we will see how it will be. If it will be more lower than expected, it will be so much positive for the Federal Reserve as fighting inflation. So for the data, those are the most important data. We have only one that is concerning GDP from the USA, where it will come to July 27. Also will give us an idea, as we are waiting for slowdown a little bit towards the 1.7%. We will see if the US economy is still robust, still able to be healthy around this 5% to 5.20% interest rate. We'll see how this will have impact on the US economy. For the UK, we saw that we have started seeing some first signs of maybe slowdown in inflation, which is a positive for the BOE, but the wages still increasing, even if this is happening right now in terms of CPI. Retail sales, the data retail sales last week, they were high. So this say something. It say that even with the actual increase in rates, and everyone is waiting for before the CPI levels, the market was pricing around 6%. Terminal rate for the Bank of England right now, it's around 5%. So even Bank of England, it may appear that they are winning the fight against inflation. This seems positive. But in terms of pound right now, it is sell-off, and we may see more sell-off on pound. Daily graphs, we are on support level 1.28. If dollar went down, we may see pound went up a little bit. But in general, the pound is losing a little bit of steam, as even the yields, the UK bonds, we are seeing the yields are coming down from those bonds from 4.7% on the 10-year, around 4.3%. We may see more around the 4%. So this may take pound down a little bit. Concerning the dollar Japan, and with after we reached the 1.45 here, and we were waiting for an intervention from the Bank of England, we saw this huge sell-off coming from the dollar that is slowing down, slowed down, but we saw a correction again. This correction erased more than half of what we gained from the pair right now, but we are around this 1.42 level, where we have a good resistance level. So we may see again a fall on the dollar Japan if the dollar, the XY, like we said, find a resistance here and come back to the lower level. That's it. That's what we have for today. We may also mention the US oil, where we saw that US oil made a huge jump, getting out of this range of prices that played for more than 3 months. We have right now a breakout coming back. We have a bullish trend right now on the oils. Today in front of us we have the WTI coming from the cuts from the Russia, from Saudi Arabia. China, that even we have problems with the economy, with the growth, with data, with PMI, industrial PMIs, world industrial activities. The Bank of China is trying to stimulate the economy. We saw some little bit of rates on some on interest rates. China to stimulate a little bit the economy. Also, the government is trying to do the same, but still the economy doesn't seem as solid. The growth is not as expected. This is having a negative impact on all the economies around the region, especially Japan, Australia. But in the same time, we may see a rebound. We don't know, but the market is still pessimistic about this. The impact on oil, we are still waiting, especially in summer, more demand on oil. This may lead, if we break the level of 77, we may go to the 78.9 level, followed by 80s levels until the 81 could be the next solid resistance level if actual conditions and the macroeconomic conditions plus geopolitical conditions continue the same. So this is what we have this week. I wish this video was clear enough. Thank you so much and see you the next week. Bye bye.